So picture this, you're suddenly hit with an unexpected medical emergency, you're in pain, you're scared, and all you can think of is getting the care you need. But as you head to the hospital, some other thoughts creep into you. Will I be able to afford it? Is my group health insurance policy good enough? Does this hospital provide cashless treatment, etc., etc.? It's a scenario no one wants to experience, and yet it happens all too often, which is why health insurance is so incredibly important, not just as a safety net, but as a lifeline to us and our loved ones. Now, I'm not going to talk about the benefits of health insurance. I'm sure you understand it sufficiently. And so in this video, I'll walk you through my checklist of important factors one should consider when choosing a new health insurance plan or when upgrading your existing health insurance policy. Let's begin. It was the year 2008 when I first started working in health insurance. And over the next 12 years, I've seen how this simple product being offered by just a handful of insurers has become mainstream with tons of features, specifications, and insurance companies. In fact, figure this, we now have health insurance for students, for newlyweds, young families, senior citizens, people with heart diseases, diabetes, and even those who have been diagnosed with cancer. So from a consumer's perspective, finding a health insurance plan is a headache, metaphorically speaking. So we are spoiled for choice, which is why your first step should be to identify your number one need. That is, why are you really seeking a health insurance policy? Is it to get coverage for an existing illness, or is it to cover maternity and childbirth related expenses? Or is it because diabetes and hypertension runs in your family, etc.? It's an important step because every health insurance company will try to tempt you with a high count of features. Oh, we are offering 25 benefits, another one will say 30, another says 35 benefits, and we'll get into a never-ending loop unless you know precisely what you're looking for in a plan and how important it is for you. Which brings me to Ditto Insurance, who are not only the sponsors of this video, but more importantly, they help you access and decode the nitty-gritties of different health insurance plans. So if you're looking to work with some excellent health insurance advisors, then do visit Ditto's website. Click on that blue book a free call button, schedule your free phone consultation, and be prepared with all your questions and requirements. The question on coverage needs to be looked at from two angles. The first is the amount of policy cover, and while there is no consensus on this, the thumb rule you're likely to find everywhere is 50% of your annual income or 6 times the monthly salary. Now, I personally have a problem with this thumb rule, and that's because no medical emergency is first going to check your income tax returns and then decide whether it should come to you or not. In that context, and in my view, one should try to keep their health insurance cover as much as one can afford it. For instance, I have two policies. One is a comprehensive health insurance policy, while the other is a super top-up, and cumulatively it gives me a coverage of 60 lakhs. But if I were to put a number to it, then try to have a health insurance cover of at least 10 lakhs. The second element within coverage is the number of members, and here are some things which might be helpful to you. So if you have a young family, that is you, your spouse, your children, and everyone is under 40 years, then it makes sense to go for a family floater policy, which is a lot cheaper than taking a health policy in every individual's name. But if there is someone in the family who is above 45 years old, which can include your parents, for example, or if someone in the family has a pre-existing condition like diabetes, any heart ailment, etc., then it's better to enroll into multiple policies which will not only be cost effective, but can actually increase the amount of coverage as a whole. So there are some permutation combinations that need to be done here, which you can either do yourself or you can consult an insurance advisor like the ones at Ditto who can do the mathematics for you. Alright, so there are 5, not 25, just 5 core components to policy coverage that you need to focus on. The first is inpatient hospitalization, which is the maximum amount you can claim against your hospital expenses. It's pretty much why we buy a health insurance plan in the first place, and yes, while most companies do offer a 2 lakh, 3 lakh, even a 5 lakh group health insurance cover, it's this coverage amount that you need to be comfortable with, because if the hospital expense goes above this number, then it comes from your pocket. The next benefit is daycare treatment, and it covers procedures like cataract, tonsils, chemotherapy, kidney stone removal, etc., typically typically procedures that can be completed within 24 hours. Now, the idea here should be to look for a plan which covers all or at least a high number of daycare procedures, and this coverage comes without any amount restrictions. From what I have seen, the understanding of which daycare is covered and for what amount is particularly important when evaluating senior citizen health insurance plans, as these often have a restricted list of daycare treatments. The third benefit pertains to the room rent, and this is explained in the policy document either as a maximal permissible amount or the type of room offered. Now, some health insurance plans have no capping on room rent, which is the most ideal situation. Some other plans offer a single private room, and other policies allow a limit of up to 1 or 2% of the policy sum insured. For example, if a policy allows for only 1% of the sum insured, then the maximum room rent eligibility on a 3 lakh rupee policy comes to just 3,000 rupees a day, which may not be sufficient in most hospitals across metros and tier 1 cities. The other issue with room rent, which a majority of policyholders ignore, is that the kind of room rent you take up has a big bearing on the percentage of claim that is eventually paid out to you. This point is important, so let me explain this with an example. So say my health insurance policy has a sum insured of 5 lakh rupees and it allows a daily room rent of up to 1%, so that's 5,000 rupees a day. Now, when I reach the hospital, I notice there is a nice, spacious private room that's available for 10,000 rupees a day, and just like how you would do it, I also instruct the hospital staff to put me in the bigger room with a mental assumption that I'll pay for that extra 5,000 rupees from my own pocket. So say I was in the hospital for 6 days and the hospital bill came to 2 lakh rupees, which I was okay with because I believed my insurance policy would take care of most of this amount. But what came as a shock to me is when the hospital informed me that the insurance company had agreed to pay only 1,05,000 rupees and that I had to pay the remaining 95,000 rupees. You see, what had happened here is that when I upgraded myself to that 10,000 rupee room, basically everything doubled. That is, the doctor's fee had doubled, the cost of surgery was now twice, the medicines, the tests, the food, everything was billed at double the rate. And because my health insurance policy was pegged per the costing structure of a 5,000 rupee room rent, the policy applied a pro rata of 50% on all related expenses, which drastically brought down my claim amount. It's a mistake that many policyholders make. So as a practice, either opt for a health insurance policy that doesn't have any sublimit on room rent, or kindly stay within the room rent limit that was stated in the policy document. The fourth benefit one has to consider when evaluating a policy are the coverage amounts for pre and post hospitalization expenses. Now, one might typically see an eligibility of 30 and 60 days, but where you need to be attentive is on the amount of pre and post hospitalization coverage that the plan offers. Again, some plans would go up to 100% of the sum insured, which is most ideal, but then there are also plans that offer just 10%, and I even came across one plan that will pay a maximum of just 3,000 rupees in post hospitalization expenses, which is like next to nothing. And finally, your coverage schedule is likely to have some sublimits, which is a cap on the amount of expense a policyholder can claim. Now, many health insurance plans have sublimits. You generally find this on certain procedures like cataract might be 10, maybe 15,000 rupees per eye. Maternity expenses almost always have some sublimit to it. The same goes with dialysis, psychiatric treatment, organ transplant expenses, etc. So these 5 elements, inpatient hospitalization, daycare procedures, room rent, pre-post hospitalization, and sublimit on certain procedures form the core of a health insurance cover, and it's something one should examine very carefully. If you're getting good value from this video, then please do give this video a thumbs up. And if you aren't a subscriber yet, then do consider becoming one, as I can then serve you videos as soon as they are released and also share with you some investing strategies, tips and stories that I continually post in the community section. I have broadly titled this section as Exclusions, but there are 3 important parts to this. The first is the waiting period, and almost every health insurance policy will have one. This waiting period can be for an year, 2 years, 4 years, even 6 years, and it's sort of a hibernation period during which certain types of claims will not be admissible. Additionally, there are some particular illnesses or some specific situations like maternity, for example, where a different set of waiting periods might apply. So I'm just saying it again. Firstly, there is a waiting period within the main policy that is applicable for most kinds of hospitalization, and then there is a set of other waiting periods for specific situations or illnesses, all of which will be listed in the policy document, so don't forget to read that. Of course, as a thumb rule, the lower the waiting period, the better it is. But if you don't have any pre-existing illness, then the waiting period is not something you need to be bothered about much. A second point to consider are the co-payments, which is that share of the claim that needs to be paid by the policyholder. For example, let's say the approved claim amount comes to 50,000 rupees, and if there is a co-payment of 20% on the policy, then the insurance company will pay you only 40,000. Now, from what I've seen, co-payments are generally triggered in senior citizen plans or in special plans like the ones related to diabetes or cardiac care. But surprisingly, there is a 5% copay in even a mass market plan like the Arogya Sanjeevani health insurance policy. And finally, we have the exclusions, and most health insurance policies have some prohibitions. Things like any treatment done solely for cosmetic purposes, non-allopathic treatments, pregnancy and childbirth is excluded in most policies, injuries or illness due to drug or alcohol abuse, experimental treatments, self-inflicted injuries, etc. And while these might seem pretty standard, it's always good to read through these before considering a health insurance plan. Point blank, you cannot opt for a health insurance plan which does not offer a cashless service. So cashless means you can get your medical treatment done without having to fork any money, and the insurance company will directly settle your medical bills with the hospital. And while all insurers offer a cashless service, not all hospitals are part of an insurer's cashless network. In fact, of the 70,000 odd hospitals we have in our country, insurers offer cashless in anywhere from 4,000 to 10,000 hospitals. It's a number that varies from insurer to insurer, but don't be surprised if you see some weird things happening here. For example, a few years back, Max Bupa policyholders could not avail cashless treatment in Max hospitals due to some contractual issue between the two parties. Now, something like this can be a problem, which is why I'll advise you to do two things. Firstly, check if there is a decent count of hospitals in and around your locality, your PIN code, which are a part of the insurer's cashless network. And secondly, ensure that your city's most popular hospitals are also available in that list. For instance, I reside in Delhi, and so I'll search for hospitals like Indraprastha Apollo, Max Super Speciality, Sir Gangaram Hospital, All India Institute of Medical Sciences, BLK Super Speciality, etc. So remember, it's not the count of hospitals you should be interested in, but look out for the best hospitals in the city, because 90% of all hospitalizations are planned, and it's in your interest to get the best healthcare your insurance can buy and to avail it on a cashless basis. The final element to consider is, of course, the premium, which should come only after you've narrowed down the list of insurance plans per the earlier 5 variables. Now, some points are very obvious. The older you are, the higher is the premium. If you have a pre-existing illness, then you have to pay more. A higher sum insured means higher premium. So is the case if you opt for a lower waiting period. And specific benefits like maternity, OPD, international cover are all expensive, and all this gets added up to the policy premium. So the more you ask for, the more you'll have to pay, which is why nailing down the core requirements, the must-haves, is so important. Once you have a list of 3 or 4 health insurance plans that fit within your requirements, then that's when you can compare the premiums and also measure those plans against some good to have features like the no claim bonus, consumables cover, restoration of sum insured, annual health checkup, etc. Actually, the no claim bonus is a decently important feature, so keep an eye on that. Now, health insurance premiums in India are not expensive when compared to the rest of the world. But we Indians love a discount, don't we? So here are some things you can look at. One, if you don't have a pre-existing disease, then you can opt for a higher PED cover, which should save you 4 to 5% in premium. Secondly, you can opt for co-payment, which can bring down premiums by 8 to 12%. You can look at plans that offer a 5 to 10% discount to non-smokers. You can pay for multiple years, 2, even 3 years, and get a discount on the premium. There are insurers offering a renewal discount if you maintain a healthy lifestyle. And finally, there are discounts which are offered on the basis of your credit scores, the city you live in, and there are also loyalty discounts if you are an existing customer. So check with the insurance company or an insurance agent who can give you a better idea of what's available. But remember, premium comes after you have an absolute clarity on the fitment, benefits, exclusions, claim, and the cashless service. And once you put everything together in a table like this, there is no reason why you would not have figured out a solid health insurance plan for yourself and your family. So pull out a couple of hours over the weekend to review your health insurance needs. And if you want some help with that, then do connect with the folks at Ditto for a free consultation. The fact remains, health insurance is an important part of our personal finance portfolio, and I sincerely hope you found this video useful. Thank you for your time. Do hit the like button. Kindly share this video with your friends, and I'll see you 3 days from now. Until then.